Welcome everybody. This is a quick take on a tweet that I find personally quite exciting. So I shared this here on my Twitter or X page. By the way, my handle is _mm85. Go and follow me there. You will also find me on LinkedIn under my name, and also obviously you can subscribe to this channel and smash a like to pump this channel to 50k subscribers. That would be awesome. But anyways, the post I shared is referring to a couple of things that I also talk here on the channel, but I also said on X before. This is from an account, Shanghai Macro Strategist, which, by the way, has been quite bearish on China in the last couple of months leading into this. But then we got the stimulus talk, right? And I said, rather than always thinking about the number of trillions that we should expect in terms of stimulus, we should see some structural changes instead, and that China has a more long-term strategy and is going step by step, touching the stones and crossing the waters instead of issuing those consumption coupons and plowing billions into the economy. But of course, there are some investor expectations. And now this is a very simple to understand tweet, in my opinion. So there is the Institute of Finance of the Chinese Academy of Social Sciences that has released its Q3 macro report, and they have outlined three policy advices or main advices. And this is good to hear because maybe you have followed me already when I said countless times that China needs to diversify its asset investments and go out of real estate, and instead should sustainably bring up the stock market and have more sharing of the stock market gains with its population. That must be the goal for getting another 400 million of people into the middle class of China. I think that's an announced goal by China, and I think stock market or a welfare system plays a big role in that. That's just how I see it personally. This is kind of just some common sense, I would say. I'm not saying I'm an economist or anything. It's just how I'm reading things. And the thing what's getting me excited about this tweet here is that it's now kind of being acknowledged by a first it's just this Chinese Academy of Social Sciences, just one player in China, but it's coming out of China, and somebody there basically is arguing into the same direction as what I've said before, which is, first off, number one top point, issue more treasury bonds. I think that's something which the investors community really likes to see, because that's basically providing liquidity and fiscal easing. So more money, but also putting that in as an investment in areas such as elderly care, childcare, education, and healthcare, and affordable housing, which definitely is something that I agree with. I think China should build kind of a welfare state, and we see sometimes, I'm German, China copying lots of German stuff when it comes to the legal system, when it comes to the apprenticeship and some formal educational things for the industry, and such things are oftentimes a little bit of a copy-paste thing there, which they are taking over from the German approach, which is, in my opinion, good to see. And one thing that is lacking and missing is reforms in the Chinese system for a better taxation system, a better welfare system, and so on. All of the reasons why the Chinese are flocking into the housing market as an investment case, instead of really having also more diversified asset classes, and why the Chinese are pretty conservative around that. So these sectors really need to be improved. They're also not in a good state in China, to be honest. And the Treasury bonds could help that, the issuance with that, to alleviate this problem, which I think is a structural problem, right? So this is much more than just handing out coupons for people to buy like a new fridge or something like that, right? This is much more long-term thinking and sustainable. Now, what's becoming also important here is, we have this talk about deflation in China, falling prices, right? And what they're pointing out here is that China is at a different trajectory than the US. They're in a different part of the cycle. and that now China could actually aim towards a 2% inflation target, so meaning fighting deflation and easing substantially and pointing this target out there, 2% of inflation. By the way, also the same inflation goal that the US is having, just coming from the other way around, right? Just saying we need to get inflation back down, and China should aim for getting the inflation back up to 2%. That's what they are saying here, because I think that's a good point. It would actually set expectations, the market expectations, because sometimes, we see with the current rally, investors getting excited about stimulus and such, and then we see those meetings which have not actionable numbers by China, and then very quickly the investors are kind of, very disappointed or something. They need more targets and that sort of stuff. And if China would just set, a 2% inflation target and said, okay, we're going to do whatever it takes to get there, and we keep on doing easing policies and stuff until we actually land there, and then we try to keep it there, that would be very actionable and something that we're currently still missing. So this could be a big number and anchor point for investors to watch. So now, these two things are more around the traditional measures of stimulus and what investors have been talking about, and economists mainly, and pretty much in line with the expectations of the Western investors, right? And now the third point, which is I think the most important one, which gets me the most excited here, is that they talk about the use of the capital markets in order to have money flow into the funds and stock market industry as a connection to the welfare system, right? So they've pointed out the welfare system here for the first time, investing in all of these sectors. But now here they also talk about the capital markets as a mechanism in order to have the participation of the general public. So I said before, China should do something like a 401k, like for every employee, like automatically deduct some money from their their income, and put it into the stock market. And like the insurance industry and then the national funds and so on, they could do this orchestrated. And what is needed for that is more legislation, a more refined industry, better regulation, and so on. And I think we've seen a couple of steps towards that in the past, but never really an announcement like that, right? And I said, well, to me, it's common sense. Like if China wants to build this new welfare system and they want to diversify out of the housing market, and also they want to get the money going, which they have parked in bank accounts, like the trillions of RMB that are available but not earning anything currently, so there's no upside to that really, especially in the low yield scenario that we're in. This should be state guided towards a new system, and I think here also with what they're mentioning, like the national social security funds and the whole industry starting to issue products and make this more orchestrated over time, they should really establish this type of a stock market stabilization until hopefully the stock markets are looking a little bit more what we see in the US today with the QQQs and the SPY and so on, just keep on going up. Just one, even every dip is being bought by the institutional investors with new liquidity coming into the markets. That sort of thing has created a wealth effect for Americans, and we don't have that much type of stuff actually in Germany or in Europe overall. I think China, if they want to play a role, they should really think about that, in my opinion. This also may be related a little bit to this US versus China talk that we have, China now becoming this big superpower. They're doing well in lots of these areas, especially the economic output, right? But in terms of the financial stuff, China is lagging behind. And if China has any ambitions to become like a superpower on global stage, and I think they are not there yet, then they need to consider also their financial capabilities. And part of that, in my opinion, is how to structurally solve this crisis currently, even though some of this crisis is maybe also a bit of a confidence crisis instead of a real crisis in terms of the industry is doing quite well when it comes to exports. GDP is growing at 5%. Lots of stuff are not that bad as people are saying. However, there are definitely structural imbalances in China and structural issues. And I think, why I'm so excited about this, just from an investor's perspective, this could pave the way for a very, very long-term China bull market, and also more wealth creation in China. And to participate in that, as there might be funds strategically buying and selling blue chip stocks and ETFs of Chinese tech companies in the future. I mean, this is exactly what we would need as retail investors. Those big players come in backed by a national plan, orchestrated and so on, and providing the liquidity, and a new type of asset class would be created or stabilized and growing over time, and that would create a wealth effect over time that would tremendously help the domestic economy, in my opinion, and it would bode well with all of these targets here that have been outlined. So pretty much this tweet, in my opinion, in line with what are my personal expectations. And so it's good to hear this for the first time coming also from inside from China. Now we would need a policy follow-up by actually the policymakers announcing plans that are going towards these directions. I think we've seen some of the stuff here and there, for example, with the retirement age getting higher and stuff, but maybe not so much on the welfare side and the capital market structure here. We did get the news the other day about the fund, the special fund that has been put into place, where funds can actually been taken out and borrowed from banks, from national banks, and can be invested in the stock market. So that's a first form of that. But there needs to be more legal and policy support with that, in my opinion, and structurally outlined. But that may take a little bit of time to also refining the laws. Let's see if we get a little bit more of that news and confirmation. By the way, I think this account is turning bullish on China because of news like that. And I'm glad he's reading it that way as well, because this is, in my opinion, the future of China, where it's going, and part of the opportunity there in this multi-year bear market for now, and what could actually be the outcome in the future based on that. So thanks for watching. See you in my next videos.